SOFI Technologies. So it's been another big week for SOFI stock, with the stock up over 5% in the past 5 days. In this video I will analyse SOFI stock and give you my thoughts on what is happening right now and whether this is time to buy or sell SOFI. What's up guys, and welcome back to the channel. SOFI could bounce back stronger than ever, and why this might start sooner than you think, so keep watching until the end. I will try to answer the most important questions. When is the best time to buy SOFI stock? And let me know in the comments if you agree or disagree with my analysis. Before we get into the video, I want to thank all you guys who watched my recent videos. It was great to hear from so many of you again after taking such a long break from YouTube. And a big welcome to all the new subscribers. In the past week we have just broke above 17,000 subscribers. Yet so many of you guys are still not subscribed. Like 89% of viewers in the past 28 days are still unsubscribed. Fix that right now and stop missing out on the great recent calls that have made over 300% in the past few weeks. Smashing the thumbs up costs nothing, but it helps the channel so much. Can we get another 300 likes on this video? Help make that happen. Finally, I want to point out that I'm not a financial advisor. This is not financial advice. Now let's get straight into it. SOFI's rollercoaster ride. Should you jump on board SOFI stock right now? SOFI can grow here, but it will never be a 10-bagger stock, which is an interesting thing to think. And here is the logic behind this. What has gone wrong? SOFI is a consumer bank. This is not a sexy business, although it can be profitable. Wall Street does not place a high value on it. And we have seen that very clearly with the recent analyst downgrades and their very low price targets. Wall Street clearly does not see the value in SOFI. Now the comparisons here is between Dave stock, which is also a digital bank, that is now a penny stock with a market cap of only about $250 million. But in this article there is also comparisons between SOFI to General Motors and General Electric's, two banking spin-offs that have not done much for the better part of a decade. Now something to note here is that you don't always need a company to be the best company in the world to make money on stocks. Like for example, Dave stock is highlighted here as now being a penny stock with a market cap of only $250 million. But if you had never heard of Dave stock and only bought Dave within the last 4 months, then you would have made approximately 400% on your investment, as Dave stock has gone from $4.47 up to over $20. Just something to keep in mind, that sometimes it actually can be about timing the market rather than time in the market, despite what the likes of Warren Buffett say. Now when SOFI released their latest report, the stock exploded upwards on the day and of course dropped back down again later in the week. Of course I predicted this in my earnings preview video that I did the week before earnings, and seeing the great value in the price of call options, I was able to get out with 100% within the first hour of trading. Of course, over the past few weeks, I have also called out ICU stock, which started to take off on Friday. And in that video, I also go through a bonus stock, which was URGN stock, specifically pointing out the value of the February 16 call options. These went from just 80 cents up to 175 at closing on Friday. So stop missing out on these stop picks. Subscribe to the channel right now. Anyways, going back to SOFI, it was pretty obvious what was going to happen on the earnings release. Analysts were seriously doubting that SOFI would be able to achieve its targets. But if you follow SOFI, then you will have known that they exceeded their targets on every earnings report since the company went public. And I was highly doubtful that SOFI would start missing now, so this was one of the easiest plays. And I highlighted this point so many times. The report did have some good numbers in it. Personal loan volume was up 41% on the year. Net interest income was up 81%. Total revenue in the financial services segment jumped 160%. For 2024, SOFI is anticipating net revenue of at least $550 million and positive net income of 10 to 20 million. It expects lending revenue to nearly double thanks to the technology and financial services platforms. 2 years from now, SOFI is projecting GAAP earnings of 55 to 80 cents per share. So all of these are good solid numbers. Not amazing numbers by any means, but they are very solid. And keep in mind that SOFI do always seem to aim on the lower end of what is achievable and then go and absolutely smash their targets. Now, when we look at market beat, a few things become very obvious very quickly. First of all, the stock is beginning to move away from the bottom of its 52-week and 50-day range. And the average trading volume has increased a lot over the past few weeks, now averaging over 65 million shares. But the short interest is increasing for SOFI, which I will look at in just a moment, with quite a bit of SOFI float sold short. Looking at the most recent analyst ratings, we can see that analysts have been slashing their price targets. The most recent of these is Morgan Stanley, dropping from $7 to $6.50, which is the lowest price target that this stock has ever received. Now, this comes at a time when SOFI is performing better than it has ever performed before and finally turning profitable. So back when SOFI had only a fraction of its customers and were making huge losses, these very same analysts were giving price targets north of $30 for this stock. So something seems very odd about these recent price targets that are being cut down to lower than the stock price itself right now. What are your thoughts on this? Let me know in the comments below. Now, as I said a moment ago, there seems to be more shorts than ever. This data is from Nasdaq.com, which shows short interest so far for SOFI stock is at an all-time high. And when we look at Fintel, to back up this data, we can see that there is 16.5% of the float sold short. However, despite this, we are not seeing any major institutional investors selling off their shares. Out of the largest shareholders of the company, according to the most recent F13 filings, they have been increasing their positions in SOFI. Here we can see that Vanguard, BlackRock, as two of the largest, and then Two Sigma Investments, which have increased their position by 58%. We can see that right here, 58.3%. These top institutions own more than 30% of the company, and they're increasing their positions, not selling. Now, there is an old saying here that comes to mind: do as I say, not as I do. We have all these analysts that are going about downgrading SOFI stock, giving lower price targets, and then the institutions are actually turning around and they're buying more stock. Let me know what you think about this in the comments. Looking at the charts, we can see that SOFI stock has very strong level of support at about 750. Anytime the stock has dropped below this, the shares have been snapped up, and it's been back above this level within 3 or 4 days. Even when SOFI dropped to its 52-week low in November, it was back above this support level within just 10 days. Now, like I said last week, there is a very strong level of resistance at about $8.50, and the next level to break would be about $9.20. So after the earnings release, SOFI stock broke above $8.50 but failed to meaningfully break the $9.20 resistance. Now, in my opinion, there is a lot more upside than downside for SOFI stock right now. Despite the fact that analysts are cutting their price targets, I think that they are underestimating the latest earnings report and the positive growth figures. SOFI Technologies delivered a profit as promised. Is it time to buy? Now, this is an interesting article which highlights a couple of very interesting points. So I'll take a quick look through this, and there's a link to the full article in the description for anyone who wants to have a read of this in full. First of all, this highlights the effect of SOFI's recent earnings report. For years, SOFI has been able to point to positive adjusted EBITDA. A lot more investors started paying attention to SOFI in early 2023 after it began guiding towards GAAP profitability. And while Wall Street expected 0.0 EPS, SOFI actually recorded 0.2. But SOFI is expecting the economy to contract slightly in 2024 and for several interest rate cuts during the year. Now, I did speak about this in my previous video, how management have always seemed to guide on the safer side by kind of keeping their expectations and their guidance quite low. In a way, they are guiding in case of the worst case scenario, and then they end up beating expectations on every occasion. I highlighted this in my last video before the earnings report, that management have beaten the expectations every single time since going public. And now management expects to earn between 7 and 8 cents per share this year on the GAAP basis. But they are actually expecting between 55 and 80 cents by 2023. Now, if SOFI are able to hit these targets over the next 2 years, then that would be a 10x of earnings per share in just 2 years, going from around 8 cent expected this year up to 80 cent. But then management are also expecting this to grow by about 20% per year after that. Which leads to the very important question, of is SOFI a stock to buy now? And the numbers are very interesting. SOFI increased its tangible book value by $334 million last year, up to $3.5 billion at the moment, with the expectation to grow this by another $300 million at least this year. But keep in mind that this is a company that has a current market capitalization of $7.7 billion, which is more than 2 times its book value. But right now, for comparison, as it says here, shares of JP Morgan, America's largest bank by book value, currently trade at 2.15 times its current book value. But unlike SOFI that is valued at $7 billion, JP Morgan is valued at over $500 billion. SOFI is intent on becoming a top 10 financial institution. At its current pace of membership growth, this could happen in about a decade and make today's shareholders very wealthy in the process. Despite its recent run-up, this is still a good stock for relatively young investors with a higher tolerance for risk to buy. So let me know your thoughts in the comment section below. If you've watched all the way through and enjoy my content, then please hit the like button, it really helps the channel out. And if you're new, hit the subscribe button and bell notification, follow me on Twitter if you would like to see another update video soon. Nothing in my videos is financial advice in any way, I'm not a financial advisor, but thanks for watching and I'll catch you in the next one.